market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the conflict in the Middle East is widening. The U.S. and Israeli forces continuing to bomb Iran, and Tehran responding with missiles fired towards Israel, Saudi Arabia, Qatar, Kuwait, and the UAE. Now, energy infrastructure has been targeted, forcing Qatar to halt production at the world's largest LNG export facility. The pressure is growing on the U.S. to keep the conflict short. The U.S. Defense Secretary has said it will not be an endless war. But when President Trump was asked for how long it will take, he replied, whatever it takes. The U.S. Secretary of State has indicated that the war is only just getting started.
I'm not going to give away the details of our tactical efforts, but the hardest hits are yet to come from the U.S. military. The next phase will be even more punishing on Iran than it is right now.
Bloomberg's Jumana Bersachi joins us now from Dubai. Jumana, so what does whatever it takes look like?
Borrowing from that eponymous phrase of Mario Draghi, indeed, that is the exact language that President Trump used yesterday when he was describing how long the war would go on for. And he said whatever it takes. From the very beginning, they anticipated it could take as long as 4 or 5 weeks. So really suggesting that this isn't going to be wrapped up in a matter of days, but actually could take weeks. And you just heard their comments from the Secretary of State, Marco Rubio, suggesting that if anything, the operations are going to intensify in coming days. We know from the Central Command Unit that over the course of the first 48 hours of the war, over 1,100 targets were struck within Iran. They're going after military infrastructure, nuclear infrastructure as well, with the usage of some of those stealth bombers to access some of those material or sites that are embedded deeply into mountains, and then continue to target some key command centers as well. Only this morning, CENTCOM announcing that they had taken out a command unit for the Revolutionary Guard. At the same time, the U.S. continues to call on the Iranian public to rise up as well. There are no signs of that happening on the ground, Francine. But again, to go back to what we were saying and what we've been reporting in the last 24 hours, what we have seen is a real expansion of this conflict, of this war. There are now 12 countries involved. And Iran took it one step further yesterday by specifically targeting energy infrastructure for many of these Gulf states.
So, Jumana, the State Department has ordered all U.S. citizens to leave the Middle East. What do we read into that?
Yeah, well, this is just another sign that they are expecting operations to intensify and, if anything, not calm down or not de-escalate in the coming days. That notice came through from the State Department urging all American citizens, residents of a huge number of Middle Eastern countries, pretty much all of them, to leave the region. And of course, that becomes very difficult and challenging in an environment where key airports in the region continue to be non-operational. The airspace is still closed. It's estimated that as many as 4,000 flights a day have not been operated or being canceled. And many of these airlines are running with very, very low, with a low capacity of something like 5% for just key essential flights here. So it is very difficult for these residents and citizens to leave, but all the signals point to the fact that the war, at least for the time being, will not be de-escalated in the coming days.
Jumana, thanks so much. Jumana Bersachi there with the very latest from the Middle East. Now, let's bring in our panel. With me here, Bloomberg opinion columnist Marc Champion, Themos Fiotakis, global head of FX strategy and EM macro strategy at Barclays. And joining us from Dubai is Anthony de Paola, Bloomberg's Middle East energy markets reporter. So thank you all for joining us. Anthony, let's start off with you. It's very clear that global energy markets have been upended by this war. Is the biggest fear that the Strait of Hormuz really gets closed and so oil tankers can't go? Or is it that Iran seems to be targeting by proxy also energy infrastructure around the Gulf?
Yeah, good morning, Francine. For the moment, clearly the issue is Hormuz, and it's effectively closed because ships are really not transiting there. We've seen vessels getting blocked up inside the Gulf, not able to leave, and then other ones waiting outside of Hormuz around the UAE port of Fujairah and other areas trying to come in. Plus, we've seen a couple of vessels that have been hit around those waiting areas. So that's another concern for shippers. So shippers are really avoiding that area. That creates a knock-on effect inside the Persian Gulf at a lot of these refineries and oil production facilities, is that when the ships aren't coming in, there's no one to pick up the crude oil that needs to be exported or the products. So it can't get out and it can't get to the customers, and then it's building up in the facilities there. So that takes away, of course, the concern is around the facilities, whether those get hit and get damaged, because when things do open up, those won't be able to come straight back into the market and begin resupplying the market, Francine.
And Marc, what exactly is the strategy of Iran right now? So first of all, the force is kind of unmatched to what we've seen in previous conflicts. Is it to try and get the Gulf states to put pressure on Donald Trump to finish the war quickly, or is it really spreading chaos across energy markets?
Well, I think it's going to be both those things. The Iranians are fully aware that the question is time. They have a certain number of missiles and launchers that they can use, and every time they take a launcher out to fire a missile, it's at risk. They're being degraded, so they don't know how long that will work. This kind of adding to that is the fact that the first time around last summer, when they had this a previous Israeli-U.S. attack to deal with, the Iranians fired in large volleys their most sophisticated missiles and so on right at the beginning, and then quickly realized that they had wasted a lot. Most of that got shot down. I mean, it was only later in the 12 days that they started to get through, because they had saturated defenses. So this time around, they're conserving their more capable missiles, using a lot of drones and older rockets. So it's a question of time, and they don't know how much time they have. The Americans don't know how much time they have. So what they're trying to do is pressure the Americans via the Gulf states, through energy markets. Trump's fear that oil prices might rise in the U.S. U.S. will actually probably be less sensitive to that because of its own shale production. But in Europe and so on, they want the rest of the world to start putting pressure on Trump. But
what do we know about the weapons? It's very difficult to know how much Iran has. And again, the defense systems of some of the Gulf states were, maybe not overwhelmed, but there are drones that went through.
Oh, absolutely, but they have sort of some difficult choices to make as well. So they have Patriot missiles and so on. These are extremely expensive and quite scarce. And if you know that what's being sent at you is drones, and that later on you will get more ballistic missiles because that's what's being conserved, then you really don't want to use your Patriots, because Patriots can bring down ballistic missiles. A lot of things can bring down drones. So you may just have to let drones through.
Themos, is the market behaving the way it should, given the severity of this, or is it still underpricing certain risks?
I mean, if we keep the Straits of Hormuz closed or shut for a couple of weeks, I don't think we're priced yet, either in terms of commodity prices or in terms of the implication of higher commodity price across bonds and equity markets on this front, basically. But,
I mean, the Strait of Hormuz, and again, there's almost a self-imposed moratorium, is that a lot of ships just won't go that way.
Yeah, I mean, at the end of the day, that's that. But there's a sense that there's risk going through that. So, yeah. And it is also not an endless conflict in that sense. So there's pressure from the Chinese for that passage to become safe again. So it's not an endless. That's probably why the market is not going all the way as far as to price 3 or 4 weeks of a blocked passage from there. But if that risk materializes, we're not priced fully for that.
Anthony, I mean, you look at oil, it's up. European gas was up 34% because of this Qatar LNG shutdown. Is Europe actually the region that has the most to lose in this?
Yeah, well, Europe really depends on LNG imports. They depend a lot on the U.S. imports, and there are Qatari exports going to Europe. But when those exports get shut off, that's going to bring up the prices all over the place, because a lot of those cargoes that do go to Asia, those Asian buyers there are going to draw on some of the U.S. cargoes and trying to get those. So it's going to bring up those prices all over the place. And we did see that major price reaction on European gas, because we did see that capacity, the LNG capacity actually taken offline. So far on the oil front, we haven't seen that spike as high as some people have thought, because we haven't seen the real interruption or damage to capacity. So traders still have that kind of wait-and-see attitude. Are we going to see the Hormuz open up a little bit? And if we do quickly, then we've still got the capacity. So on oil, they're still waiting a little bit to see actual impacts on capacity and production, whereas on gas, we've seen that impact. We've seen the impact of what the shutoff of really one of the top 3 producers in the world has done. So that's really put markets into turmoil, Francine.
And Themos, I mean, because there's no warrants, no end in sight of this war, you really see expectations of inflation going up. Is that, again, through the right lens? Because, a war could, I don't know whether we're talking about a couple of months, a couple of years, or how you view that and the impact it has on inflation and therefore, what central bank reaction function?
I think the markets are, particularly the bond markets, are focused on inflation here and now. I'm not sure that this is the most pressing angle. We have been through bigger terms of trade, bigger price shocks. We've had tariff shocks. We have had natural gas prices go to 300. There has been, the economies have seen through these shocks in a bigger way. But there are 2 main angles here that I think the market is trying to also oscillate around. The first one is, don't forget, we entered this situation, the market selling U.S. assets and buying European assets, diversifying away. Now, it is reminded of the big vulnerabilities that the European continent has in terms of reliance to energy from the most dangerous locations on the planet. The other angle here is that obviously when that resolves, when the situation resolves, we could be also in a better place. So the market is trying to oscillate between what they want to buy for a resolution and where they want to get insurance for an energy shock hitting the hardest.
Marc, is there an off-ramp for the U.S.?
That's going to be tough. So there was this very interesting exchange, over yesterday, the day before, where President Trump said, well, the Iranians already reached out to us to talk. It was supposedly Larijani, the head of the National Security Council in Iran, who is emerging as, for now, the most important leader in Iran. And he said, we are not talking to the Americans. He has to say that. I mean, if you look at the history of what happened and led to this war, multiple times when they got into talks with the Americans struck when they were supposed to go and negotiate. Of course, also the JCPOA, which the Americans collapsed, in 2018. So, he has to say this. He represents the hardline regime. But the Iranians know that they're in a difficult position. Right. They need an exit. Someone is going to have to take the lead, and I suspect the way that this will ultimately work, if there is an off-ramp, it'll be via Oman and the Gulf states, all of which have a strong interest in ending this war, and they will put pressure. And with, the Gulf states have very strong channels to Washington. They weren't able to stop the war. They tried. But I can imagine that opening up again.
I mean, it's difficult if you're living in Iran right now. So we have very little visibility of what's happening on the ground. Is there, there was an urgence from the U.S. administration for an uprising. Again, unclear how that happens because the Royal Guards are still, armed and have all the weapons. So is there anything that we should be thinking about a plan after? Is it when Donald Trump says whatever it takes, is it at all costs getting rid of this regime?
This is the difficult part, right? If you have if you think through the logic of this campaign militarily, how it should work out, it should be, 4 to 6 weeks of intense bombing to destroy. They've already achieved air superiority. That was number one. Then they need to, destroy all the kind of, the missile, the means of response that Iran has. Then they can move on to, just flying drones all over the country and, taking out Basij or IRGC as they build barricades and so on, and show to Iranians that you can, if you come out, we will be your Air Force. That is a long process, and it involves a lot of question marks. And that, I think, is why you see this kind of utter confusion from Rubio, etc., as to why we're there and what we're trying to achieve. You have, Hegseth and Trump saying, well, we're not ruling out boots on the ground. There is no way that the U.S. is putting boots on the ground, but they need to say this stuff to, to show that they have escalation dominance all the way.
And Anthony, on China, I mean, China buys so much of this Iranian crude. They kind of weighed in saying, they've urged all sides to ensure the safe passage of ships through Hormuz. Is there anything else that China can do to put pressure on either side?
I mean, pretty much everyone in the Gulf depends on China as their main buyer, and China really has a stake there that the oil continues flowing. They had discussed with Saudis issues around Bab el-Mandeb before. They're discussing with the Iranians, as we understand, around Hormuz right now. The only thing they can really do is probably keep that pressure there. But again, this is a key transit route for them, not only for the oil, but also, as we said, the LNG. And it will be important for them that that infrastructure remains working, remains functional, so that once this war is finished, those exports are continuing to flow and able to flow to them. The Chinese have a huge strategic reserve that they've been building up over the past several years, and that's been helping prop up some of the oil prices, even as we've seen excess production in the market. So they should be good for some reserves, but they really want that waterway open and continuing to flow. Francine.
All right, thank you all for a terrific briefing. Bloomberg opinion columnist Marc Champion, Anthony Paola, our Middle East energy markets reporter, and Themos Fiotakis, global head of FX strategy and EM macro strategy at Barclays. Coming up, the UK Chancellor seeks to keep her spring statement a low-key affair. We'll look ahead to our update on the state of the UK economy. That's next, and this is Bloomberg. Reeves will deliver an update on the state of the UK economy later today, focusing on the government's economic plan for Britain. Well, Bloomberg's Lizzie Burden joins us from Westminster. Lizzie, what, if anything, is Reeves expected to announce?
Well, Francine, this is the first chance the Chancellor will have to respond to the economic implications of the US-Iran war, as you've been discussing, the impact on energy markets. And already we've seen traders paring bets on Bank of England rate cuts, so they only see 1 quarter-point cut this year. So the Chancellor is expected to frame this as underscoring the need for fiscal stability. But we were already expecting it to be a policy-light affair. There's a huge spotlight on whether the Labour Party is going to lurch to the left after that by-election defeat in Manchester last week, but we're not expecting her to make any major announcements on tax and spend when it comes, for example, to defence spending or how to fix unemployment. She's expected to punt all of that to the autumn. Now, we are going to get the latest growth forecasts from the Office for Budget Responsibility. We'll be able to calculate how much headroom she has against her fiscal rules. It was £9.9 billion. It went up to £20 billion. It's expected to stay there. And our colleagues report that she's had a £22 billion windfall from stronger than expected cash tax receipts and lower debt interest payments. That should help the Debt Management Office to slash gilt sales, to get gilt issuance, I should say, to the lowest in 3 years. And that should be good for gilt yields.
Lizzie, thanks so much. Lizzie Burden there outside, Abingdon Green in Westminster. Now, for more, we're joined by Ruth Curtice, Chief Executive of the Resolution Foundation. Thank you for joining us, as always.
Thanks for having me.
We started by saying the Chancellor wanted a low-key affair. This is certainly what she got, but it doesn't make the economy any better.
No, and what we'll get today are these forecasts from the Office for Budget Responsibility, which won't take account of everything that's happening in the Middle East. And so, unfortunately, will look quite out of date already. I think the Chancellor was probably hoping to deliver a positive message today. Inflation coming in lower than expected, government focused on the cost of living. But, of course, these changes in gas and oil prices blow a hole right through that.
I mean, households are cautious. If you look at the labour market, it's OK, but it's not great. What do you worry about the most?
Yeah, I worry about the labour market a lot. So unemployment has come in higher than the OBR expected just in November, and we've seen youth unemployment rise to higher than the European average. I think it's good for the Chancellor not to be making huge tax and spending announcements, but there are some issues in the economy where arguably today is a missed opportunity.
I mean, if you were the Chancellor, what would you do actually and again, I've heard everything like, look, it just needs to be more radical. People need to feel a little bit better about everything that's going on. Otherwise, this growth will remain lackluster.
Yeah, so I think certainly when we talk to businesses, we've heard that it is good that this has not been an event with loads of speculation, that there are some signs of kind of a revival of confidence that this might support. But on things like unemployment, she's got a youth jobs guarantee, but a young person has to be unemployed for 18 months to qualify for that. She could reduce that to 6 months today, but I don't think she will.
Ruth, I mean, this is not a government that's strong by any means or stretch of the imagination. Does that impact policy?
Well, I think what it certainly impacts is policy uncertainty. So this Parliament has been actually the highest of any of the last 7 for policy uncertainty. And when you think about everything that's happened over the last decades, that's quite extraordinary. So the Chancellor's delivering a low-key event. She wants to persuade people that that's because tax and spending plans are stable. But obviously with political turmoil, that's hard for her to guarantee.
I mean, can she do? There's only so much, given the fiscal constraint. There's only so much actually she can play around with.
Yeah, and we're expecting headroom to come in broadly the same as the 22 billion she had in the autumn. That was a big rise on what she had before, but it's about the average move that you see in forecasts of this kind. So it's not at all money to burn. I mean, is there one thing that would change the fortune? I mean, it's not only one thing, but I don't know if it's positive news on the labour market or how the UK deals with AI that could also change the psychology of households. Yeah, and that fundamental kind of will the UK get out of the productivity slump that it's been in, not just since the financial crisis, but barely growing since COVID. AI looks like something that could shift the dial on that. But in the short term, we've got consumers and businesses holding back. And what can the Chancellor do today to kind of really boost people's confidence that her plans are stable, things aren't going to change, and they can start to invest?
I mean, would it be too soon for her? I mean, I'm not talking about reversal, but change to some of the things that she's announced to maybe support some of the smaller businesses more?
I mean, I think we've had a lot of chop and change, haven't we? So I actually have some sympathy for her trying to keep things on an even keel, and I think business too will appreciate in the end that. But there are definitely things that I would change. So on youth minimum wage rates, for example, those are currently due to kind of accelerate towards the rate for adult rates. When youth unemployment is rising, I don't think that's the right thing to do.
I mean, we've been covering extensively, of course, the Middle East and all of the uncertainty in geopolitics. Yeah. Does it mean that CEOs and households actually hold back just because there's so much, concerning news out there?
Yeah, I mean, I think one of the reasons we've seen this lack of consumer confidence is because when you have an inflation shock, it has this scarring effect on consumers, on their attitude to spending. And if they're about to be proved right, if we're about to have another shock to energy prices that really hits household bills, then that will only introduce more caution.
The rates markets now don't really expect a second cut from the Bank of England. Would that make a material difference to, again, the fortunes of the UK?
Yeah, I think exactly. The Chancellor was hoping that today she'd be on that path where inflation is returning to target. The bank were telling us to expect that in April, where interest rate cuts were coming, and the bank could start even to play a role in boosting that confidence in reducing unemployment. But a shock of this kind will absolutely limit their ability to do that.
Ruth, thank you so much for joining us. Ruth Curtice there, Chief Executive of the Resolution Fund. Now we'll have special coverage of the Chancellor's spring statement from around midday UK time, and coming up, more analysis on the US-Iran conflict. We'll also be joined by a former German ambassador to the US and the chair of the Munich Security Conference. This is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Middle East allies call on the U.S. to end the conflict in Iran quickly. President Trump says it will go on for as long as it takes. Iran strikes back, targeting energy infrastructure. Saudi Arabia halts operations at its largest oil refinery after a drone strike nearby. Brent crude tops $80 a barrel, and European gas spikes again after Qatar closes the world's largest LNG export facility. So France is also planning a boost to its nuclear arsenal in a major realignment of Europe's defense structure. President Emmanuel Macron says Europe needs to take more responsibility for its own security.
J'ai ordonné I have ordered an increase in the number of nuclear warheads in our arsenal, and to prevent speculation, we will no longer disclose any figures about our nuclear arsenal, unlike what we may have done in the past. Those who would dare to attack France know the unbearable price they would have to pay.
Well, joining us now from Berlin is Wolfgang Ischinger, former German ambassador to the United States, also chairman, of course, at the Munich Security Conference. Professor Ischinger, thank you so much for joining us. I mean, no one was really expecting, as we left the Munich Security Conference, to have such a huge war that seems to be spreading. First of all, is now the time for Europe really to think about, to have a nuclear deterrent? Because there are voices, especially in Germany, that are not fully aligned. And if not now, getting together, when?
Well, I think that Emmanuel Macron's offer to start talking about strengthening the European component of nuclear deterrence is a good idea. It's a timely idea. Actually, it's an overdue idea. In 2020, he raised it in my presence at the Munich Security Conference. That's 6 years ago. And I think we should have started talking about what could happen, how could Europe strengthen its own contribution to nuclear deterrence, provided so far primarily or almost exclusively by the United States with respect to the European allies. So I think this is a good idea. It's very important that everything that we're going to be doing, discussing with our French partners, is going to be done in total transparency with the United States. We don't want to lose the solid support and coordination with the United States, which has provided extended nuclear deterrence now for half a century.
But, Professor, I mean, what's the way forward, first of all, in the Middle East right now? So we'll get on to Europe in a second. But when President Trump says, look, it'll take whatever it takes, what does that mean? How much further can this escalate, and how many countries will be drawn into this war?
Well, first of all, I think there is, of course, the good news. I hope the possible good news is that the Iranian people are being offered a chance, an opportunity to free themselves from a regime which has been really quite terribly murderous, especially in recent time. The not so good news is that many of us here in Europe are not sure that there is a good enough plan how to make sure that this is not going to end, as you just said, in an extended kind of warfare, in extended bombing campaigns. Let me put it this way. The goal of this operation should be to tell the Iranian people, we are with you. And our military campaign is not directed at you or against you. It's directed against these murderous leaders, and only against them. In other words, you are our friends, and we want to work with you. I hope that message can be made, and I hope that message can come across in a credible manner to the 90 million or so Iranians who are waiting for their freedom after half a century of religious repression.
But Ambassador, it doesn't seem that it's going this way, right? This has an end, but it's unclear what the U.S. is thinking. I mean, if there's a change in leadership, I mean, these, are leaders that have been at the top for a long time, with still the royal guards that are armed. So what's the plan for the next day, and what role can Europe, if anything, or China, play in trying to see a next day, and exactly how everyone can help the people of Iran?
Well, let me offer one critical remark. I think it is not, the best approach, the one selected, the one chosen by the Trump administration, along with the Israelis, to start this on their own. I think it would have been a good idea to discuss this beforehand with European allies, with others in the region, including Turkey and others. The concern that this may lead to an extended military campaign over many weeks, maybe months, and that the end result may not be, as President Trump put it, a peaceful rearrangement in the entire Middle East. That concern is widespread, not only in the region, but also here in Europe. So all we can do at this moment is hope that at least some of the revolutionary guards, some of the military leaders in Iran may actually decide not to shoot at their own population, at their own citizens anymore, and may try to support the creation of a more moderate, more Western-oriented, less religiously conservative future leadership.
Ambassador, China's critical in all of this, and you had, some from the very top of the Chinese leadership speak at the Munich Security Conference. What do you think their role in this is? So far, they've just urged all sides to be careful in the Strait of Hormuz. Can they play a bigger role diplomatically?
Well, I have not had a chance to talk to my Chinese friends, especially not to Foreign Minister Wang Yi. But what I assume is that they're deeply concerned about what's been going on. Look, the takeover of Venezuela, if one wants to call it that, and the intended changes in Iran could mean, at least from a Chinese perspective, that in the future, America is going to have a say in to whom is Venezuela going to sell oil, and to whom is Iran going to sell oil. And in both cases, China has been the major buyer of huge quantities of oil. In other words, from a Chinese perspective, this is not only a question of what happens to Iran, this is a question of the US-Chinese relationship with the possible outcome of enormously increased US leverage over Chinese energy imports. That is probably for the Chinese a worrisome possible development.
Yeah, Ambassador, I wonder whether there's also a read across to what Vladimir Putin's thinking, seeing everything unfolding in the Middle East, and whether that makes him more resolved to get Ukraine, or whether that scares him off a bit. I don't know. If everything is linked, what kind of impact could this have on the Ukraine war?
Well, look, if the Trump administration were to show the same determination to offer, military threats, if diplomatic solutions are not forthcoming, then maybe a solution to the Ukraine conflict could be imagined within the next few months. I have not yet seen that kind of U.S. pressure against the Russian Federation, but from a Russian point of view, of course, Russia has had to abandon, was actually forced to lose a number of classic Russian allies: Syria, Venezuela, now possibly Iran. Remember, Iran is the major supplier of a certain type of widely used Russian drones in the war against Ukraine. In other words, as a secondary effect of this current military operation by the United States in Iran, Russia could be significantly weakened in their capability to conduct this drone warfare supplied by Iranian Shahed drones.
Ambassador, just a final question on, the Chancellor Merz will be in D.C. speaking to Donald Trump. What do you think he'll ask him? What should he ask him, maybe even behind closed doors?
Well, I think that the main question for Europe is the United States, is the Trump administration going to continue, as has been U.S. policy for the last 7 decades, to continue the evolution of a united Europe? Or is the Trump administration trying to pull the European Union apart looking for nations that are willing to support a kind of a MAGA approach to international affairs. I would hope very much that the outcome of this German visit to the United States would be a repetition, a reaffirmation of a close partnership between the United States and the European Union as a historic project trying to prevent quarrels and even wars between the European partners of the United States. I think that would be a historic achievement.
Thank you so much for your time. That's Wolfgang Ischinger, the chair of the Munich Security Conference and, of course, former German ambassador to the United States. Now, the conflict in the Middle East has thrown up a lot of uncertainty. So how do chief executives navigate the business climate? Well, Michael Sen, the chief executive of the German healthcare company Fresenius, is with us now. Mr. Sen, thank you for joining us, and thank you also for being in London. When you look at geopolitics, I mean, Europe relies a lot on China for certain, I guess, ingredients that they're needed in the drug development. Does geopolitics throw everything up in the air? How exposed are you, for example, to energy prices or also just the Middle East in general?
Yeah, good morning, Francine, and great to be on your show. Look, your question already at the very beginning is hitting the decisive point. The dependency in the pharmaceutical industry, especially when it comes to active pharmaceutical ingredients and even materials which go in before, there is a high dependency. I just call it vulnerability in terms of being dependent from China and India, but particularly in China. So geopolitics today have to have a vital role in the boardroom. Yeah. Actually, our company is now well positioned to navigate this new geopolitical evolution of a new world order, because what you see is that it's highly transactional based. National interests are put at the priority. And when I look at the state of play between the U.S., Europe, and China, I see different speeds. In the U.S., you see healthcare and the access to essential medicine is top of priority, and not only a matter of public health, but national security.
But if Europe were to do the same, right? Let's put we put healthcare, at the top of security and sovereignty. What does that look like? Is it more subsidies? Is it stockpiling? What does that mean in terms of national strategy? What should it mean?
You see different approaches, and this fits with our strategy as a business entity, where we have been doubling down on a local-to-local strategy when it comes to local manufacturing and even building up an entire supply chain. So in the U.S., you see it's moving away only from public health, but it has a vital role in the national interest, in the national security strategy, and that's why it is accompanied by industrial policy. Yeah. And that is also with the international trade policies. That's why you see we are a #1 player in IV generics, that the generics are exempted from the tariffs in the U.S. because you have a systemic drug shortage, and they want to ensure, actually restore an entire manufacturing base in the U.S., whilst Europe, I would say, has the headline with the Critical Medicine Act. They got to tighten their belt on actions, and also China is very much banking on what it can do in national interest.
But Michael Sen, I mean, given everything that's going on, again, with the Strait of Hormuz, energy prices going up, I think, gas prices in Europe is up 34%. What's the most complicated thing that you'll have to deal with in the next 6 months? Do prices go up from here?
Yeah, well, if I look at our company, our direct exposure in the region, I got to say the well-being of and safety of our people in the region and the continuity of patient care is top priority, but the direct business exposure is limited. It depends on the scale, scope, and duration of the conflict. Yes, of course, especially in Europe, dependent on LNG, prices have been spiking. We have been pretty much hedged for the remainder of the year, but we need to see what are secondary effects if it is lasting. But again, the bigger picture of geopolitics means that we're doubling down of building up the supply chain in the U.S. We already manufactures 70% of what we cater in the U.S. for the U.S. And last week, we announced a partnership with Flow Corp to have a fully vertically integrated supply chain on a drug which is very essential.
Is it difficult to move things from, because of potential closures in Hormuz and otherwise?
No, currently for us it is not, because after COVID we have learned that we took different routes. This is less so on the ingredient part, but more, let's say, for the medical technology business on power electronics. So we go around South Africa, if you so wish, and took precautionary action.
Okay, so interesting. Michael Sen, thank you so much for joining us today. That was Michael Sen, the chief executive of Fresenius. Now, coming up, Blackstone, the latest firm to be hit by withdrawal requests from its flagship private credit fund. We'll have more on the debate around risk for private markets. That's next, and this is Bloomberg.
Geopolitics is a major issue. It's much more complex today than it has been since World War II. I'm talking about Ukraine, Russia, Iran, North Korea, our relations with China. And that could have an effect, but it may not. So these things may diminish over time.
Well, Jamie Dimon there, the JP Morgan chief executive, speaking to Lisa Abramovitz of Bloomberg. Now, Blackstone's flagship private credit fund has been hit by record redemptions in the latest sign of unease in the industry. Now, the company is allowing investors to redeem almost 8% of shares, equivalent to $3.8 billion. Now, private credit funds have seen a rise in redemption requests recently, but of concern over their exposure to software companies at risk of disruption by AI. Now, to talk about this, but much more as well, we're joined by Elizabeth Weymouth, founder and managing partner of the investment firm Grafine Partners. Elizabeth, thank you for joining us. I mean, there's just a lot going on in terms of private markets. Private equity returns have also been a little bit underwhelming since interest rates rose. Are we going to see just much more managers start new ventures because they can't quite achieve the carry they expected if they stay?
Well, it's great to see you, Francine. Thank you for having me today. Yes, there's a lot going on in the private markets, that's for sure. With respect to big strategies getting bigger, I think we're seeing that in private credit. That is what we focus on actually within private equity, sort of the antidote to that trend. But as these strategies grow, in private credit's case, going from a niche strategy now to a critical part of the capital stack, there will be issues, and it's also the structure that one has to pay attention to when we have the private credit securities, so as you're seeing with Blackstone, et cetera. But our whole thesis at Grafine is that the industries are maturing in the alternative asset management business. So private equity in particular, where we're focused, the big firms have gotten bigger. And as they get bigger, the size can become the enemy of returns in some cases. In the U.S. in particular, the top 10 firms over the last 10 years have generated a return of a 1.3x multiple of invested capital and a 14% IRR, which is fine, but it's probably lower than what one was expecting when they were looking for alpha.
Are more investment managers coming to you looking for funding?
Well, so what we looked at is this backdrop of returns contracting and said, actually, we're all here for alpha. So how might we find this unique off-market, high-quality deal flow? And the trend that we're leaning into is exactly as you're referencing. The firms are mature enough such that people are spinning out of them. And when these entrepreneurs now spin out to create brand new private equity strategies, usually sector-specific, very focused strategies, they have 15 years of senior deal experience under their belt. So for us, we can look at someone who has that kind of experience with a track record we can verify and get behind them. Because the issue they have when they're spinning out these days, you'll see the fundraising market is terrible for anything that's not in the mega fund category. So they need capital, significant capital, to exercise and complete the deals in their pipeline. And they need business building expertise. So that's another strategy. So we do that, put them in business, de-risk the startup, and get this deal flow, which is really targeting a 3x multiple invested capital or better. So sort of a pure alpha strategy in private equity.
Elizabeth, but when you look at the sectors,
yes,
are there any sectors that you're keen on that maybe are a little bit unloved, and which are the ones that you're avoiding at the moment?
It's a really important question. We have focused on the individual first and foremost, so the track record of it's almost a venture strategy, and you're finding a founder and getting behind the founder. But the sectors that we end up liking are those, most recently we've backed two different teams, both of them in the industrial space. So one could argue those are boring businesses. We don't think they're boring at all. But infrastructure services, environmental services, waste management, really core cash flow oriented businesses that aren't as impacted by technology, as an example. But that's what we've been focusing on most recently.
How do you see the software concerns playing out in the longer term?
It's interesting. We did, as this was all going down, we looked into every single portfolio company that we have, and we have about 32 portfolio companies. I'm happy to say not one was impacted by the rather large macro event of what was happening in the software sector. Because these are early businesses, we target enterprise value of around 50 million to 500 million. And they're really businesses that are usually family-owned businesses that are handing over, their companies to institutional capital for the first time. So technology as a tool to maximize value is absolutely employed, but it's not necessarily a software orientation.
I mean, do you expect it's a funny market, isn't it? Because it kind of goes after, there's not necessarily much news. Maybe it's a report where there was a big sell-off, but I don't know what the read across is. Is it markets that are on tenterhooks? Is that we haven't quite figured out what happens with AI?
I think that's very fair. I think investors are on tenterhooks at this moment, and sort of the slight movement can cause a big reaction. But I think that when you have those dislocations in a market, like we've seen with respect to software, not every company is bad, and not every company isn't going to survive into the future. So this does create opportunities. You find that the dislocations create opportunities for alpha. So if you can just identify the right companies in the right place, you should stand to do well.
I mean, how do you look at the Middle East? I mean, again, there's a lot of concern about inflation, about this escalating, about what this does to energy infrastructure and prices.
Yes.
Is it too soon to say the impact on some of the companies?
I think, first of all, it's a significant issue. Geopolitics, as Jamie Dimon says, is unbelievably important, obviously. And for every single investment that we make, the investment case has the risks that you must consider, and geopolitics is one of them. When we think about what's happening today, I think it's a little too early to say what exactly the issue will be and where we need to hedge or be careful. But you can say on a broad level that it's probably the supply chain risk one should look into, and also energy security and energy prices and the impact that those will have on the companies themselves. But in private equity and what we do in particular, it's a very long-term investment game. So this could be one of those, dislocations that I just talked about that provides an opportunity for us to get some companies as an interesting entry point.
Elizabeth, thank you so much for joining us. I hope it's the first of many interviews to come.
Lovely to see you.
Weymouth there, founder and managing partner at Grafine Partners. Now, just an update. The Israeli military says they have struck Iran's leadership compound in Tehran, including Iran's presidential office and national security office. So this just coming in the last couple of minutes on Bloomberg, a reminder that this is impacting stocks and bonds across the world. Again, bonds are tumbling. The rate, for example, in the 10-year UK gilt was surging, the 10-year Treasury yield climbing as money markets pricing out a rate cut, while the dollar remaining the haven of choice is rising a touch. Again, comments from the White House suggest that a will to make the conflict more durable, forcing markets to digest the lasting consequences for inflation, energy prices, but also equity market performance, with quite a lot of question marks. A reminder also that Bloomberg Invest is taking place in New York over the next 2 days. Guests joining open interest from 2 p.m. London time include the chief executives of Apollo, of Ares, plus Mistral AI's chief revenue officer and the Fed's Neil Kashkari. Up next, Bloomberg Brief, and this is Bloomberg.